Working capital. What is it and why should I care about it? Working capital is the biggest investment most businesses make, sometimes without realising it. Don't manage your working capital well and your business could fail. In this video, we explain exactly what working capital is using everyday language and include simple examples and diagrams. Working capital is an accounting term, but don't let that put you off. You'll see it's not that hard to understand. My name is Jess Coles and I teach business owners and managers how to manage their businesses more effectively. I've added over £50 million in cash to a variety of businesses through better working capital management. If you're new to this channel, Enhance.training provides online business courses to help professionals, managers and business owners improve their performance. If you like this video, please give it a thumbs up, subscribe and share it with friends. If you are a business manager, a business owner or a manager within a business, the decisions you make will impact working capital. So what is working capital? Working capital is the cash investment that you need to make before you can sell an item to make a profit. Let's take making a smoothie as an example. You've done your market research and you know you can sell the smoothie once made for £10. So before you start, you need to buy some fruit. Let's say the fruit costs you £4 for each smoothie that you want to make. So at this point, you've not sold anything, but you've paid out at least £4. And if you didn't have the £4, you would not be able to buy the fruit and make your first smoothie. In addition, you'll probably need to use a blender to get a good smoothie. A lower cost option might be to use a fork to mash the fruit, but rather you than me. And you might not be able to get £10 as a sale price if there were lots of big lumps in your smoothie. And next, because you're a busy person, you hire someone to make the smoothies for you and spend a little bit of money on electricity. Let's assume you need to pay for both of these before you can sell your smoothie, this table shows. So to make one smoothie and give yourself the chance to sell it for £10, you need £6.50 in your pocket to start with. The £6.50 is your working capital for making one smoothie. So working capital is the accounting term for the cash investment you need to make to get a product ready to sell. Once you've sold your first smoothie, you would then have £10 and you could buy more fruit and make another smoothie to sell. Then you'd have £13.50 and in the next round you could then afford to make two smoothies at the same time. And so on and so on, and this is how you start growing a business. To speed this process up, you might take out a loan so you can make 20 smoothies for the first time. So let's take a deeper look into the cash challenges of running a business. A common error made by too many people is they assume that earning a profit is the same thing as earning cash. Profit and cash are not the same. There is nearly always a timing difference between when you earn profit and when you collect the cash. Everyone is taught that profit is the key thing to track, yet as every business owner knows, you can't spend profit. You need cash to pay the wages, to invest in that new product, to pay for advertising, etc. So let's look at why the timing differences between cash and profit occur. In this example, we're going to undertake these sets of activities to make a product. These are the cash payments and receipts relating to making these products. And here, the dotted line shows how the accounting profit would be earned when matched to these activities. And finally, here is the cash balance over time. As you can see, the cash balance line is quite different from the profit line. They both end up at the same point, but have different movements and different timings from each other. Accountancy rules mean that there are significant timing differences between when your profit is recognised and when you get cash from this profit. This diagram shows how big these differences can be. In most businesses, you typically earn profit before you get the cash into your bank account. So now you understand what working capital is, let's discuss how working capital impacts growth. In nearly all businesses, the faster your growth, the more cash you need to have available to invest in that growth. Or in accounting terms, the bigger your working capital investment will need to be. Going back to the smoothie example, if you make one smoothie at a time, you'll need to invest £6.50 in your business. If you made 2 smoothies at the same time, it would be £13. And if you made 100 smoothies in one go, then your investment would be £650, ignoring any efficiency opportunities. This simple example demonstrates the cash investment needed to grow a business. And there are many ways to get cash, from profits, from investors, from bank loans and overdrafts and so on. Assuming you have enough customers to buy your products, then how much cash you have available is usually the next limiting factor in your business growth for the reasons shown above. As working capital is likely to be one of your largest investments, it makes sense to take steps to manage this investment. There are many ways to reduce your investment in working capital. Most of these steps aim to do one or more of these 3 things. Firstly, get customers to pay earlier. Second, get suppliers to accept payments later. And third, to reduce the amount of product you need to keep before selling them, or in accounting terms, to reduce your stock or inventory. There can be a tough balancing act between the above 3 things and generating profit and growing sales. Each business chooses a slightly different balance between these 5 areas. Get this balance wrong and your business can fail because the business runs out of cash. For this reason, it pays to spend time managing your working capital and running cash flow forecasts to check that you have plenty of cash available to support your business plans and growth aspirations. More businesses fail while in growth than in decline. And this shows you how important managing working capital is and why understanding how working capital impacts your business will help you personally, no matter what level within the business you work. There are some businesses that get paid before they have to pay anything out. This is called having negative working capital. This is how the previous example of making a product would look with negative working capital. As you can see, the cash is always positive. It also remains very different from the profit line. Food supermarkets are a great example of businesses with negative working capital. And let's go through why quickly. A supermarket customer pays cash or by card before they leave the store. Therefore, the supermarket has this cash in its bank account within a day or 2 of the sale, i.e. they get their customers to pay very quickly. In addition, each supermarket keeps the amount of products in storage, their stock, to a minimum. Most of its products are on the shelves to be sold at any one point, and the store takes deliveries of replacement products each day. Lastly, the supermarkets require their suppliers to wait quite a while to get paid. They get suppliers to accept payments typically 60 days after delivery of their products to the store. All these steps mean supermarkets get paid cash before they have to pay out cash to run their business. This is negative working capital. 2 very important benefits of having negative working capital are: firstly, you don't need to invest in working capital and therefore you have more cash to invest in other areas. And secondly, you can grow very quickly. As the higher the growth, the more cash you get in. It is a very nice business model to have. Understanding what working capital is and managing working capital are both very important aspects of running any business. Many of those businesses that fail haven't paid enough attention to managing the cash impact of working capital. Don't let this be you. And if you like this video, please hit the thumbs up button below and subscribe and hit the bell to get notified of our weekly video releases. This really helps us produce more videos to help you. And if you've got any questions, please leave them in comments below and I'll reply as quickly as possible. Thanks for watching and I look forward to seeing you again soon.